Looking at Tesla here on the daily chart, you can see we're currently trading above that 200 SMA, and that is going to be our first area of support in here going forward. You can see in the past that when we pulled back down here from that last pullback in the end of February, we didn't really care about that psychological level of 300, right? We cared more about the moving average, and we kind of stood right here on this 200 SMA for a minute before we broke down, confirmation of a breakdown, went back, retest, and then pulled all the way back. So closing above this 200 SMA on the daily was key for us in here today, and we did just that. So yesterday's trading session a little easier, right, than today. So you obviously had some volume coming in here last week. You had that close above that 9-day EMA, and then a gap up yesterday's trading session. It was kind of easy, right? Because okay, above 260 calls, below 260 puts. Easy, fair enough, right? But today was a little bit trickier. Didn't really know exactly what to expect. And obviously, we had that pullback about, okay, this is what's going to be. But then that 2 o'clock, that kind of end of the day run that we had, where we just kind of cranked it up above the 288 mark and actually we closed at 288.14. So we're still above the 288s. That's what kind of put everything over the edge. So now, where does that put us going into tomorrow? So that is the question. So, right, you had an easy day yesterday's trading session. Today didn't really know what to expect, kind of waiting for it. Boom, you had that pop. Now what's going to happen? Are we going to run into 300, gap up into the 290s, then pull back? Or are we going to pull back tomorrow just a little bit because we kind of overstayed our welcome here? You can see that we had a $20 basically move yesterday. We had $10 pop in here today. So I'm expecting a little bit of pullback, but let's see if we can hold this 285. If we can hold the 285, that is good and bad. Good because obviously we need to take a little breather up here and we can head to the 300s, but bad, it's also because we need a little bit more of a pullback in here. Let's get this RSI back down a little bit. It kind of ran up itself a little too quickly here for us, right? So 5 days, you kind of popped. You were completely oversold. Now you're up here to almost neutral. You're only about 20 points off, less than 20 points off, then being overbought. So let's cool our jets here a little bit. Let's hang around that 280 to 285 channel. Let's kind of cool this thing off, and then we can start working our way higher. Or is this thing going to keep on popping, hit 290s, 300s, pull back sharply, do the 271s, and then work its way up again? That's going to be the question as we're going in here. And now we mentioned that this 200 SMA is what we really cared about in the past because of the psychological levels didn't hold. Well, you can see that when we ran up past 300, didn't care about that. When we pulled back from 300, didn't care about support 300. We cared about resistance right here when this minor pop that we had about a couple trading sessions after we breached 300. So we cared about it as a resistance once, but other than that, we didn't really care. So that's why we're not really too worried about this 300 psychological level in here going forward as a main resistance. We're going to overshoot it, and probably we're going to be in this 318 to the 308 area. You can see that that was a little problem for us here back in end of February. So that 308 to the 318 channel, that's probably going to be where you're going to get some selling off, right? Because everybody's going to think, retail trailers, right? Traders are going to say, okay, psychological level 300. We're above 300. Here we go. We're ready to go. And then everybody's going to start trying to buy. And then the big boys come and sell the top off the thing, right? So that's why you're going to get that kind of overshooting those psychological levels like that. So the 308 to the 318s, let's see if we can kind of take it off when we get up there. But until then, the 280 to 285 range, that's what we're looking at in here to kind of pull back, consolidate, see what happens. If we have to kind of bounce off the 271 again, that's fine. That's a big fib level for us in here. You can see we're kind of far away from our 61.8 and our 100%. So we're kind of in the middle. So that's a good level for us to bounce off of if we're going to bounce off anything. And then we can start working our way up to that 300 above that. And it's really going to be that 308 to 318 range in there. IV rank wise, what are we looking at? Well, you have right around a 59 IV ranking here. So you still have tons of premium in your options, even though volatility got sucked out in here the past two trading sessions, because you had that big run up, that sharp run up, right? $20, $10 days in here. Your volatility got sucked out a little bit, but there's still plenty of juice in here for your options to go. And actually your call skew, or your skew, is now being shifted to the put side. That's what you want, right? So normal distribution of your puts and calls. Your puts are always going to trade richer because that is where your risk is. So we're normalizing that. We still have juice on our options, but volatility is getting sucked out. So all in all, good to go in here. Buy, sell, do whatever you want. Premium wise, it doesn't matter because you're getting the big enough moves in here going forward. So speaking of the big enough moves in here, you got a $14 expected move by this Friday. You go out the next Friday, right around $28. You go out the following Friday, 32, and your monthly April expiration is after that, and that's going to be $36 expected move in there. So decent moves in here these past 2 days have told us a lot. Obviously, it said, hey, guess what? We're ready to go bullish when everybody's ready, but we don't want to overextend ourselves too much just yet, right? So let's kind of cool it off here. Let's watch that 280 to 285 range if we are going to gap down tomorrow, right? If we're gapping up, then we're just going to say, hey, let's hold off until the 300s. If you can confirm or we kind of breach that, then we get up to that 308 to 318 level. Then we kind of taking the top off of it there. It kind of depends on what's going to happen as far as the whole market, as far as gapping up tomorrow. But if we're going to say gap down, then we're going to watch that 280, 285 below that. Hopefully we can get a pop from the 271s, work on our way higher. If we're gapping up, then we're waiting for 300 to be breached. After that, 308 to 318, sell the top off of it, coming back, and then we can go from there. The reason that we're saying all this is we go to the 30-minute chart. You can see kind of how overextended we are from our 9-day EMA and our 200 SMA in here. So a little overextension this day, what up until 2 o'clock was going to help us out a little bit, which was going to make tomorrow even more difficult than what it already is. But just by looking at this and you had this pop, now you're saying, okay, well, now it's even more overextended. We like it, obviously, long-term bullish. We like it short-term, basically bullish. But as for a day trade, we might be able to scalp some stuff out of here out of the top, right? So depending on what happens tomorrow, gap up or down, 30-minute chart is saying, hey, little overextended in here. Where RSI is still high. We're on some volume here on the daily. So let's kind of bring this thing back down to life. So again, $14 expected move by the rest of this week. That's 3 more trading sessions. So we'll see what happens here on Tesla. All right, guys, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.